Unlock the secrets to understanding your business's profitability by mastering the income statement. First, we need to gather your revenue. This is the total income generated from your primary business activities while you think sales of goods or services. Next, identify your cost of goods sold, or COGS. This includes all direct costs to produce or acquire the goods or services you sell. Subtracting COGS from your revenue gives you your gross profit. This crucial number shows how efficiently you're producing your core offerings. Now, let's account for your operating expenses. These are the costs incurred in the day-to-day running of your business, like rent, salaries, marketing, and utilities. Subtracting your operating expenses from your gross profit yields your operating income, also known as earnings before interest and taxes, or EBIT. Sometimes, companies have other income or other expenses. This could include interest income, gains or losses from selling assets, or interest expense on loans. Add any other income and subtract any other expenses from your operating income to arrive at your pre-tax income. Finally, deduct any applicable taxes to arrive at your net income, the bottom line. Why your company's true profit for the period. Consistently and accurately preparing your income statement is vital for showcasing your company's financial health. Use these steps to build a clear picture of your performance.